one of my overall goals with office hours, which has now been going on for some time, has been to help you with pattern recognition and to help you to understand filtering and to help you to understand, how you can really trade the actual moves versus the noise, right? And I share in my trade ideas feed, which is really more like a like live blog of sorts, where I'm sharing um, setups that I am looking at and how I am seeing the overall market in terms of the internals and um, how I like to really frame out my opportunities. All of that is in the Trade Ideas feed on Discord. Now that is available for level 3 and for members. And over the years, I've seen a lot of growth from those who are clearly active there and have been sharing you know feedback with me over the years. They have found it to be very helpful to understand, really, at a high level, how do you put structure around your opportunities and around your setups, and then from there you have to say, well, what am I doing with um, my trading? How do I actually enter? How do I exit? How do I manage my risk, right? How do I size opportunities? All of those things are things that we need to really learn, right? And the reason I'm highlighting a lot of that is actually you can use Slim AI, which Slim has been now training for several months. Having it learn almost everything that he has learned over now. I think it's now 51 years for him. So that's something that you want to do, right? Ask it questions, right? If you are having challenges, share those with it, and it can help you. And you can also have a live voice chat with Slim AI. So something that I wanted to share with you, because in the end, right, this is really a ideally multi-decade journey for us through time, right? It's not going to happen right away. You will see growth, hopefully, uh, you know, fairly quickly, but you will never stop learning and never stop growing, right? And during that, as you hit new, high watermarks, you will have different, different challenges that you didn't have earlier in years past. And that's where you can use Slim AI, right? So that's why I think it is super, super helpful, right? Slim has seen everything in his time, and or let's just say almost everything. There is no way to see everything because there are always really new things happening. But he's seen so much in 51 years, right? There aren't that um, many people out there who have been involved in financial markets for as long as he has. So use Slim AI to help you along your own journey. I think that's really important. Okay, jump over to ACMR. Again, some new ones I've never seen before. ACM research on the intermediate term. I'm just zooming out here to see what we see. Sort of an interesting looking setup right there as it's moved out and up. Don't know what this company does. 37.70 up to 41.70 are the levels, short term. So this is where, if you want to look long, there are obviously lots of ways to do it. I'm just sharing with you the way that I like to look at it. All right, you had that earnings gap down, and then what happened? You formed a long shadow on the downside, formed a little higher low, and then you got that gap up, right? That gap up then faded right here. Why did it fade right there? Look at this. You have these equal highs right there on 32.30 and then down to 30.55. So that zone got sold again. If price comes back there, what do you see, right? What's the pattern that you see? Just let me see if I can go one tick forward. No, that's too far. Okay, anyway. See down, and it comes back up. If someone shorted here, what were they looking for? They probably wanted to see a move back to new lows. They didn't get it. They got a higher low. So then you're forming a coil. These are such important patterns to understand because huge moves will most often come out of either false breakdowns if you're long or coils, right? Where you are coming into a trading range and everyone um, is really waiting for a move out of the range. But this is a coil. Okay, so that day is really important. That high of day is 32.29. That high of day is 32.54. So let's just have that zone right there that says, hey, if price re-enters here, I'm going to want to be looking long. Let's see what happened the following day. And that arrow moved, but you get the gist of what I'm talking about. All right, so as soon as price came up here, your first thought should not be, which it could be, wow, this has already moved from 32.39, down from 30. This has already moved. What is that? Sorry, this has already moved 8% off of where it was just yesterday. I can't buy it here. Let me wait for a flag. That is an error. That is not correct. You have to be aware not about where it just has been, but where is it going? And what does that mean? That means that you have to be thinking about whether you need to be trading early here or whether you can wait for a pullback. And off of a clear coil like this, you want to be trading with that move as it's happening. So let's say you are buying, 32.50. You want to see a good move to close that bar, and then you can have two different stops. At least this is how I do it. Versus low of day at 31.40. So what's your risk? Your risk is 95 cents or 3%. Very nominal, correct? Why are you doing that? Well, if this is going to be a good coil, it's going to move out of that coil and out, right? Buyers will actually drive that higher. Okay. Understanding if you have to trade early versus you have to trade later is going to, in the end, be probably one of the most key aspects to trading, not to charting, to trading, that you will find in terms of your overall P&L. Figuring out when figuring out when you actually have to be trading early versus when you can be more passive with the entry. And that is all, at least in my opinion, everything's my opinion here. That is all driven by the overall pattern in terms of the price structure going into that key reference. If you're seeing a coil, you want to be trading earlier and trading with that move. And the reason that I'm keeping a fairly close stop versus, say, the 21 is that it should go right away because look at this. You have that failure here. You have that failure here. Sellers were there. On a third try, right, you can see that sellers were not there because we closed at high of day on volume. You see this? Check, 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 right? It's doing everything that it needs to do. So risk is only to low of day, and then you can manage that setup from there, right? What happened after that? It goes again, gaps away, right? Again, if you were waiting, you were left behind, right? Volume, all good. Keep going, one bar at a time. Every bar gives us data. Okay, still going. Don't worry about that little lower volume. Not unusual. This is a pause day. Keep going. Again, gap, gap, gap. Look at this, right? High 31.25, low 31.42. One very small unfilled gap there. High 33.88, low 34.09. A second slightly unfilled gap. That's a sign of strength. That's not saying, oh, wait, let me wait until it actually fills. Don't worry about that. That's showing you that it couldn't fill, and that's bullish. And then here, now a third gap. Okay, so now let's keep going. So now, what are we looking at? We have very nice range move out of range, right? We risked 3% and you're up 22%. Okay. It doesn't matter what happens, but what matters is the coil and the overall pattern. This is what I want everyone to be doing off hours, identifying these kind of opportunities. Where would I buy? Where would I sell? How would I manage my trade? And just doing that on your time frame, whatever that time frame is. But this is what can make a huge difference for you in your trading if you do this every single day. If you have, if you are doing this every day after hours, and really honing this for yourself, because these happen again and again and again. I don't even know what this name is. It doesn't even matter. The same pattern sets up all the time. All right, so there we are, right? You can see 1, 2, 3, and then all of a sudden you saw a little bit more, and now that is given some back. Okay, so for me that would be out for now. And okay, here we are. I didn't even know that. All right, so that's where we are for now. But a beautiful move on the upside off of that coil. Again, I don't even know what this name is. I don't know what they do. It doesn't matter. It's the same thing. What are you seeing? You're seeing a clear pattern with the coil. You're seeing relative strength. You're seeing volume confirmation on the breakout, right? That's what you want. And you have a clear level that says I'm wrong on the trade because you want it to go right away. Again, are you trading early? Are you trading late? If you're trading early and you're going with the move, you want it to follow through right away. If it's not following through, don't give it too much room. You don't need to. Okay, yeah. So you don't need to risk all the way down to the 21, which is 8%. You can risk $1, right? Risk $1 versus risking 250, and guess what that means? Your sizing can be greater on the trade. That's how you can get. Think about your curve, your P&L curve. This is the zero line. That's how you get a fat tail on the right side. This is your P&L. That's how you get your average, which is out here, skewed to the right. This is 0, right? That's how you get the average skewed to the right. You get some more fat tails like this in opportunities like this where you are having very low risk and getting a high R multiple on your risk, meaning you are having several times upside in this case versus your risk. That's how you get a fat tail on your trading. And again, I say this in almost every video, 20% of your trades on average for most swing traders will be 80% of their profits. These are what you're looking for.